If you don't want to end up like the majority of people out there, broke, constantly stressed, and stuck in a never-ending cycle of working hard but never actually getting ahead, then you need to stop overthinking and focus on one single, concrete goal: making your first $10,000. Not a million, not financial freedom in the abstract sense, just that first solid milestone that proves to you and everyone around you that building wealth is actually possible. When I was 18 years old, I had absolutely nothing going for me on paper. No money in my bank account, no qualifications, no connections, no safety net. What I did have, though, was an enormous hunger to change my situation and ambitions that were far bigger than my current circumstances. Instead of getting paralyzed by dreams of making millions, which felt completely out of reach at the time, I made a deliberate decision to focus on a smaller, far more achievable target: earning $10,000. Just that. Nothing more, nothing less. Now, as someone who has built genuine wealth from the ground up, I can tell you with absolute certainty that the first $10,000 was by far the hardest money I ever made. It took more effort, more trial and error, and more mental resilience than any amount I've earned since. But the moment I hit that number, something fundamentally shifted, not just in my bank account, but in my entire mindset. It wasn't simply about the money itself. It was about proving something crucial to myself: that making money is a learnable skill, not a matter of luck or privilege or being born into the right family. That realization changed everything. Once I understood how to earn $10,000 once, I knew with complete confidence that I could replicate it. And then scale it. And then do it again and again until those $10,000 milestones started stacking up into something truly significant. So if I had to wipe the slate clean today, start from absolute zero, and make that first $10,000 all over again, here is exactly how I would do it, broken down into 3 clear, actionable steps. Here's the truth that most people don't want to hear: the reason the majority of people never make their first $10,000 outside of a regular paycheck is not because they lack talent or intelligence. It's because they make the whole process way more complicated and risky than it ever needs to be. They jump headfirst into cryptocurrency because a friend from school made some money from it during a bull run. Or they open a brokerage account and start day trading because some flashy guru on YouTube made it look effortless and promised life-changing returns within weeks. The reality is that both of these approaches have a brutal problem: they require either significant upfront capital to make meaningful returns, an extraordinary amount of luck, or both. And when you're starting from zero, you have neither. Let me be very clear about something important here. Crypto and trading are not inherently bad. In fact, I invest in both and I'll talk about that later. But they are tools for multiplying money you already have, not methods for creating money from nothing. Treating them as your primary income source when you're just starting out is one of the most common and most costly mistakes I see young people make. What you actually need when you're starting from scratch is something fundamentally different. You need an income source that requires little to no upfront capital to begin, generates consistent cash flow on a regular basis, and gives you the opportunity to learn and grow your skills while you earn. When you look at the landscape of genuine money-making opportunities through that lens, there are really only 4 viable options. I've personally tried all 4 of them at different points in my life, and each one taught me something valuable. The choice between them matters enormously because they differ significantly in terms of how fast you can start earning, how much you can realistically scale, and how much of your time and energy they consume. Option 1: in-person services. This is probably the most straightforward and accessible starting point for the vast majority of people, regardless of background, education, or location. I'm talking about things like personal training, delivery driving, dog walking, lawn care, car detailing, nail design, barbering, photography, videography, tutoring, and dozens of other hands-on services. Now, I know what some of you are thinking. These sound basic. Maybe even beneath you. But here's the thing: that attitude is exactly what keeps people broke. In-person services are one of the genuinely fastest ways to put real money in your pocket, and dismissing them because they seem too simple is a mistake I've seen countless people make. The beauty of services is that you get paid immediately upon completing the work. There's no waiting for inventory to sell, no algorithms to figure out, no months of building before you see a single dollar. You do the work, you collect the payment, end of story. The startup cost is also remarkably low. In most cases, all you need is a skill you already have or can develop quickly, and maybe a few basic tools. No warehouse, no product inventory, no complicated business infrastructure. You can genuinely go from idea to first paying customer within a matter of days. I did exactly this when I was a teenager. I used to walk through the wealthiest neighborhoods in my area and knock on doors offering to wash cars. And I wasn't doing it randomly, I had a strategy. I specifically looked for houses with beautifully maintained gardens but dirty cars sitting in the driveway. My logic was simple but effective. If someone cares enough about their home's appearance to invest time and money into a perfect garden, they almost certainly care about how their car looks too. They just haven't got around to washing it. I was solving a problem they already had. It worked. I built up a small but steady base of regular clients and started earning consistent money. But over time, I started running into the natural ceiling of in-person services. Because I was tied to a specific geographic area, my potential customer base was always limited. In busy seasons I was fully booked, but in quieter months the income became unpredictable. And no matter how efficient I got, I could only physically be in one place at one time, working with one client at a time. That's the fundamental limitation of trading time for money in a local context. In-person services are an excellent way to get started, build confidence, and generate your first real income. But if you have serious financial ambitions, you'll eventually feel the walls closing in. Option 2, local products. The second option is selling physical products within your local community. Think homemade baked goods, handmade crafts and artwork, custom items, fresh produce from a garden, upcycled furniture, and similar things. There's a genuine charm to this model, and for many people it's a way to turn a passion or hobby into income, which is deeply satisfying. I tried this myself using some of the profits I'd accumulated from the car washing business. I started buying inexpensive components for radio-controlled model airplanes, spending time carefully assembling them, and then selling the finished models to enthusiasts at the RC flying club I attended on weekends. I genuinely loved building them, it was something I was passionate about, and the idea of getting paid to do something I enjoyed felt incredible. But reality set in fairly quickly. The profit margins were extremely thin. By the time I accounted for the cost of all the materials, the hours I'd invested in assembling each model, and the time spent finding buyers, I was left with very little actual money. The economics simply didn't work well enough. My customer base was also inherently restricted. There are only so many RC hobbyists in any given area, and not all of them were willing to pay prices that would have made the enterprise financially worthwhile for me. That experience taught me an important lesson: just because you love doing something doesn't automatically mean it translates into a viable business. Passion is important, but it needs to be paired with a market that's large enough and willing to pay enough to justify your time. Selling local products can absolutely work, and if you're genuinely passionate about a craft or a product, by all means pursue it. But go in with realistic expectations about the timeline and the profit margins involved. Option 3, global products. This is where things start to get genuinely exciting from a scalability perspective. Global products include launching an e-commerce brand, dropshipping, sneaker reselling, print-on-demand merchandise, private label products, and many other models that leverage the internet to sell to customers anywhere on the planet. The transformative advantage here is obvious. Instead of being limited to the few thousand people who live within driving distance of you, your potential market is literally billions of people. Anyone with an internet connection and a credit card can potentially buy from you. That's a completely different game. I experienced this firsthand when I decided to take my passion for model airplanes to the global stage. I was so committed to the vision that I actually flew all the way to China to meet with manufacturers in person and negotiate a deal to produce my own original model airplane designs at scale for worldwide distribution. It was a bold move, and looking back, it was one of the pivotal decisions in my entrepreneurial journey. Of course, today you don't need to fly halfway around the world to start a global product business. Dropshipping and print-on-demand platforms have made it possible to test products and reach global customers with minimal upfront investment and without ever touching inventory. But I want to be completely honest with you about the challenges, because a lot of people gloss over these. In the beginning, growth was slow. Every time I made sales, the profits couldn't simply go into my pocket, they had to be immediately reinvested into buying more inventory to fulfill the next wave of orders. Sell 10 units, you need to buy 20 more. Sell 50 units, you need to fund a batch of 100. It's a capital-hungry model, especially in the early stages, and it requires patience and discipline to keep reinvesting rather than spending what you've earned. The timeline to profitability is also longer than with services. You realistically need to budget 1 to 3 months before things start to gain meaningful momentum, and that's assuming you've chosen a decent product and executed the basics reasonably well. For someone who needs money urgently, that timeline can feel agonizing. But here's the thing, once a global product business gets going, it becomes one of the most leveraged and passive ways to generate income that I've ever encountered. Orders come in while you sleep. Customers in time zones you've never visited buy your products without you having to do anything in real time. The scalability is essentially unlimited. For someone with the patience to build it properly, the long-term reward is exceptional. Option 4, Online Services. This is the option I would choose without hesitation if I were starting from scratch today, and it's the one I recommend most strongly to anyone who wants to reach $10,000 as quickly as possible. Online services combine what I consider the two most important attributes of all the previous options, the global reach and unlimited audience of global products, paired with the immediate cash flow and high profit margins of in-person services. It's genuinely the best of both worlds. Think about the range of skills that businesses need and are willing to pay serious money for: copywriting, video editing, graphic design, thumbnail creation, paid advertising management, search engine optimization, social media management, email marketing, web development, brand strategy, and the list goes on. These are all skills that can be learned, developed, and monetized, often within weeks or months of serious focused effort. Here's the financial reality that makes online services so compelling: with physical products, your profit margin typically sits somewhere between 20% and 30% of revenue, and much of even that has to be reinvested into more inventory. With services, your margin is closer to 70% or even 80%, because your main cost is your time and knowledge, neither of which require you to spend money to replenish. And because everything happens digitally, you can begin working with paying clients within days of deciding to start. To figure out which specific online service to offer, start by honestly answering 3 questions. First, what are you genuinely good at right now, even if you don't consider yourself an expert? Second, what topics or skills do you find genuinely interesting and wouldn't mind learning more about deeply? Third, what kinds of problems do businesses consistently struggle with and consistently pay to solve? The sweet spot, your ideal starting point, is wherever your answers to those 3 questions overlap most naturally. And here's the most important mindset shift I can offer you at this stage: don't wait until you feel ready. Don't spend months perfecting your craft in isolation before you approach a single potential client. Get into the real world as quickly as possible. Start by charging below the standard market rate, not because you're undervaluing yourself permanently, but because at this stage your primary goal is to earn and learn simultaneously. Real client work will teach you more in 2 weeks than 2 months of practice in isolation ever could. Now let me introduce you to what I call the skill pyramid, a framework made up of 4 interconnected elements that, when understood and applied together, transform a basic skill into a genuine $10,000 income stream. These aren't optional extras. They're all essential. Miss even one of them and you'll find yourself working harder than ever but never quite breaking through the ceiling that separates people who dabble from people who actually build wealth. Element 1, Positioning. The single biggest lever you can pull to increase what you earn without necessarily working more hours or becoming dramatically more skilled is positioning. And yet it's the element that the vast majority of people starting out completely ignore. Here's the fundamental insight: not all clients are created equal, and not all problems are equally valuable to solve. The most lucrative positioning you can adopt is to offer services that directly help businesses make more money. Why? Because businesses think about expenditure in terms of return on investment, not in terms of cost alone. When a business is generating $50,000 a month in revenue, spending $2,000 on a service that generates $10,000 in additional revenue isn't an expense, it's a bargain. They'll do that trade every single time. And the genuinely important thing to understand is that businesses face these kinds of challenges constantly and consistently. They perpetually need more customers, better operational systems, stronger differentiation from competitors, and more effective conversion of interested prospects into paying clients. These problems are never fully solved, they just evolve. And businesses with real revenue are always willing to pay well to address them. Practical positioning shifts can make an enormous difference without requiring you to learn a single new skill. Instead of editing videos for small creators who have no budget and no clear monetization, position yourself as the video editor for entrepreneurs who use video as a sales and marketing tool. Instead of doing random one-off thumbnail designs for whoever reaches out, aim to become the dedicated, trusted designer for a well-established creator who understands the commercial value of great visuals. If you're a copywriter, stop accepting low-paying blog articles and focus instead on landing page optimization, copy that directly influences sales conversion rates and therefore has a clear, measurable dollar value attached to it. The shift in positioning doesn't change what you do. It changes who you do it for, and that single change can multiply your income several times over. Element 2, Value. This element is about fundamentally rethinking how you price your services and how you communicate that pricing to clients. The default approach that most beginners adopt is to charge by the hour. It feels safe, transparent, and easy to explain. But charging by the hour is actually one of the most self-limiting pricing models you can choose, for a very specific reason. When you charge by the hour, every conversation with a client eventually becomes a negotiation about time. They want to minimize your hours. You want to maximize them. You're both focused on the cost side of the equation, and that creates friction and limits how much you can ever earn from any given engagement. The paradigm shift is to stop selling time and start selling outcomes. Stop charging for the hours you invest and start charging for the measurable return on investment your work creates for the client. Take paid advertising as a concrete example. If you manage Facebook ad campaigns and charge $50 per hour, your client is constantly doing math. How many hours is this going to take? Can we cut that down? But if instead you say, I'll run your ad campaigns and charge a percentage of the revenue I generate for you, the entire framing changes. Now the client isn't thinking about cost at all, they're thinking about how much more money they're going to make. Your incentives are perfectly aligned with theirs. And when they see their revenue increasing directly as a result of your work, they won't just keep paying you, they'll actively want to pay you more, because more payment to you means even more money for them. The same principle applies to social media management. Anyone can schedule posts and respond to comments, and plenty of people will do it for almost nothing. That version of the service is a commodity and it's priced accordingly. But if you can demonstrate, with real numbers, that your specific strategy is increasing engagement rates, growing the audience, generating qualified leads, and driving actual sales, you are no longer a cost center. You're a revenue driver. That's a fundamentally different conversation, and it commands fundamentally different rates. Element 3, Reach. Every person starting out in online services faces the same initial challenge, getting clients. And the instinctive response for most people is to hustle, to spend hours cold emailing strangers, sending pitches on LinkedIn, and chasing down anyone who might potentially need their service. And while outreach certainly has its place, especially early on, the real game is building a presence that makes clients come to you instead. Let me share a story that illustrates this perfectly. Not long ago I was looking to hire a graphic designer for a specific and somewhat niche project, creating movie-style promotional posters. As a first step, I went to TikTok and searched for people who created that type of content. One creator completely dominated the results. His work was all over the search page. I reached out, asked about his pricing and availability. His response surprised me. He told me he'd been posting the designs purely for personal enjoyment and had no intention of doing it commercially. He politely declined. But his videos continued to grow. Weeks passed, and his content kept getting more and more views. His inbox started filling up with messages from people, brands, and businesses asking to commission work from him. Eventually he reached back out to me asking for advice on how to actually set up a business around this skill he developed. I helped him structure it properly, and today he works with me and a number of other clients as a paying professional. The lesson here is almost absurdly simple but profoundly important. Consistently putting your work in front of an audience online, even if you're doing it purely for fun, even if you're a complete beginner, creates opportunities that you simply cannot manufacture through cold outreach alone. The internet rewards consistency and visibility in ways that are genuinely powerful. The application of this principle depends on what service you offer. If you're a video editor, create content showing dramatic before and after comparisons of your work. If you design thumbnails, post case studies explaining precisely why specific design decisions led to higher click-through rates. If you're building social media accounts for clients, document your own growth journey in real time. Whatever you do, make it visible. Make it educational or entertaining. And make it consistent. Element 4, Automation and Reliability. Here is a statistic that should genuinely shock you. Based on my experience working with freelancers and independent service providers across a wide range of fields, roughly 95% of people who attempt to build a business or side hustle quit before they gain any real traction. And the reason isn't usually what you'd expect. It's not lack of talent. It's not bad luck. It's not even lack of effort. It's unreliability. After working with copywriters, thumbnail designers, web developers, video editors, social media managers, and every other type of online service provider you can imagine, I can tell you from direct personal experience that the single most reliable predictor of who succeeds and who fails is whether or not they do what they say they're going to do, when they said they'd do it. 95% of freelancers promise to deliver on time and then miss their deadlines. They go quiet for days without explanation. They submit work that needs extensive revision. They make the process of working with them feel like a constant source of stress. The people who build real, sustainable income, the ones I've ended up paying thousands to repeatedly and recommending to everyone I know, are not always the most technically brilliant at their craft. What they have, consistently and without exception, is organizational reliability. They deliver on time, every time. They communicate proactively when anything changes. They make working with them feel effortless. And that quality, that dependable professionalism, is genuinely rare enough that it functions as a competitive advantage in itself. How do you build this kind of reliability systematically? The answer is automation and good systems. The most successful entrepreneurs and freelancers I know don't try to keep track of everything in their head or scattered across a dozen different notebooks and apps. They build simple but effective systems that handle the organizational work for them so they can focus entirely on the actual service they provide. A good CRM, customer relationship management, system is the foundation of this. Odoo CRM is a tool I genuinely recommend, not because of any obligation to do so, but because it solves the core problem elegantly. It keeps all your client communications, notes, deadlines, and follow-up tasks in one organized, searchable place. You can see your entire pipeline of opportunities laid out clearly, understand where each client is in the process, and know exactly what action you need to take next and when. Scheduling calls, setting deadline reminders, tracking project progress, all of it becomes dramatically less mentally taxing when it's handled systematically rather than reactively. The bottom line is this: in a world where most of your competitors are unreliable, being the person who always delivers on time and always communicates clearly is a genuine differentiator. It's not glamorous. It doesn't require a special talent. But it will get you paid again and again by clients who have learned, often through painful experience, that reliability is rare and therefore incredibly valuable. Now let's talk about what you do once the money starts coming in, because making $10,000 is only half the battle. What separates people who build lasting wealth from people who earn well for a while and then find themselves back at square one is what they do with the money once they have it. I want to be blunt about something: I genuinely do not care how much money you're making right now. Until you have at least $1 million sitting in the bank, spending your income on luxury items is one of the worst financial decisions you can make. The supercars, the designer clothing, the expensive nights out, none of it builds wealth. None of it creates more opportunities. None of it works for you while you sleep. It just disappears. The psychological distinction that matters here is the difference between how the merely rich think about money and how the genuinely wealthy think about it. The rich treat income as something to spend, they upgrade their lifestyle the moment their earnings increase. The wealthy treat income as a tool, every dollar that comes in is evaluated for how it can be deployed to generate more dollars. That compounding mindset, applied consistently over years and decades, is the actual mechanism behind every significant fortune I've ever encountered. The vehicle for this approach is investing. Here's the framework I use, structured from lowest to highest risk. High-interest savings account. Before you invest a single dollar in anything else, you need what I call a financial buffer, a pool of liquid, accessible cash that you can draw on in an emergency without being forced to liquidate your investments at a potentially terrible time. A high-interest savings account serves this function. Yes, at roughly 3% annual interest it's not going to make you rich. And yes, technically it barely qualifies as an investment at all. But that's not its job. Its job is to ensure that when life throws something unexpected at you, a medical expense, a car breakdown, a period of lower income, you have the resources to handle it without wrecking the rest of your financial plan. The scenario I want you to visualize is this: the market drops 40% during an economic downturn, and at the exact same moment you face an unexpected personal financial emergency. If you have no cash buffer, your only option is to sell investments at their lowest point, turning a paper loss into a permanent, realized one. If you have 3 to 6 months of expenses sitting in an accessible savings account, you can weather the storm without touching your investments and let them recover over time. That's the value of what might otherwise seem like a boring, low-yield account. Index funds. Index funds and ETFs are, in my view, the most powerful wealth-building tool available to the average person, and they require almost no active management once you've set them up. The core concept is simple: instead of trying to pick winning individual stocks, you buy a fund that tracks an entire market index, giving you exposure to hundreds or thousands of companies simultaneously. The S&P 500 is the most widely known example, a single investment that gives you a stake in 503 of the largest publicly traded companies in the United States. Over the past decade, it has delivered average annual returns exceeding 10%, which is extraordinary when you consider the power of compounding over long time periods. That's the mathematical foundation behind the coffee a day analogy. Investing just $5 daily from age 18, achieving a consistent 10% annual return, produces over $1 million by retirement age. The math is real, even if the timeline requires patience. For US-based investors, I've found VTSAX, the Vanguard Total Stock Market Index Fund, to be an excellent broad market option. For UK investors, the VWRL ETF offers comparable diversification. I also allocate a portion of my portfolio to emerging market funds, which carry slightly higher risk but offer exposure to faster-growing economies. VWO works well for US investors in this category. VFEM serves a similar purpose for UK investors. The key principle with index funds is consistency. Regular contributions, regardless of what the market is doing, over a long time horizon. Don't try to time the market. Don't panic sell when prices drop. Just keep adding money systematically and let compounding do its work. Individual stocks. Individual stock picking is where investing becomes genuinely engaging and, for many people, genuinely educational in a way that passive index fund investing simply isn't. When I first started investing, I threw myself into reading company financial statements, analyzing earnings reports, understanding competitive positioning and growth trajectories. It was challenging, sometimes confusing, but ultimately fascinating, and I'm convinced that putting real money at stake was the primary reason I was motivated to learn properly rather than just skimming the surface. Individual stocks offer the potential for returns that significantly exceed what a broad index fund delivers, because you're making concentrated bets on specific companies rather than owning a diluted slice of the entire market. When a company you've invested in individually reports blowout earnings or announces a transformative product, you feel that in your portfolio in a way that simply doesn't happen with an index fund. Of course, the inverse is also true. Individual stocks can and do decline sharply, and a single bad investment can have a meaningful negative impact on your overall returns. My recommendation for anyone starting out with individual stocks is to begin small. Use amounts you can genuinely afford to lose entirely if your thesis turns out to be wrong. Treat the early phase as paid education rather than wealth building. Focus on understanding the businesses you invest in, read their annual reports, understand their revenue model, know who their competitors are and what their competitive advantages consist of. Over time, as your understanding deepens, you can gradually increase your exposure to individual names you have genuine conviction about. Cryptocurrency. I'll be honest with you about my history with crypto, because I think it's instructive. When Bitcoin first appeared in 2009, I dismissed it entirely. I was a traditional investor. I believed in real assets, tangible businesses, things you could hold or measure. The idea of a digital currency with no central authority and no physical backing seemed like either a scam or a speculative bubble waiting to burst. I wasn't alone in that view. But I kept watching. And over the following years, as the technology proved more resilient than its critics predicted and the institutional adoption began to accelerate, my perspective gradually shifted. By early 2019 I decided to make a small initial position in Bitcoin. Since then I've continued to build that position steadily, adding Ethereum as well, using a disciplined dollar-cost averaging approach rather than trying to time entries based on price predictions. Looking back, it has been a meaningful and profitable part of my overall investment portfolio. I won't pretend otherwise. But I also want to be genuinely clear-eyed about the risks, because the crypto space attracts an enormous amount of hype and an equally enormous amount of people who lose money they can't afford to lose. Altcoins and meme coins in particular can generate extraordinary percentage gains in very short periods, and can just as easily drop 80% or 90% or go to zero entirely. For every person who became wealthy from a speculative crypto bet, there are many more who lost significant sums chasing the same outcome. My approach today is measured and deliberate. I focus primarily on Bitcoin and Ethereum as the most established and most liquid assets in the space. I add to my positions gradually rather than making large lump sum purchases. I never invest money I can't genuinely afford to lose. And I stay deeply skeptical of any project, token, or influencer promising guaranteed or outsized returns. Do your own research, make your own decisions, and always remember that past performance in crypto tells you very little about future results. The path from $0 to $10,000, and beyond, is genuinely available to you. It always has been. The tools have never been more accessible, the potential market has never been larger, and the information required to get started has never been more freely available. What separates the people who actually do it from the people who spend years thinking about it is not intelligence, not luck, not connections, and not starting capital. It's the decision to begin, combined with the discipline to keep going when it gets difficult. Make that decision today.